Hey there, and welcome to Real Investment News. I'm Mike O'Neill. So the rally continues. Right now, the Dow is up 80 points, the S&P is up 10, the Nasdaq is up 50. The markets don't seem to be too concerned with yet another report coming out suggesting that inflation is starting to take off. When you take a look at this, the producer price index climbed 2.7%. That's the red line that you see here. That's faster than the 2.4% that was expected. About half of the increase for January was because of rising gasoline prices, which actually jumped more than 7%. And yesterday, you may remember that the core CPI, which is one of the main indexes used to determine inflation, actually increased by 1.8%. That is this blue line that you see here. Now, this is important because at 2%, well, that's the Fed's target for core inflation. And if we hit that, we could see the Reserve become more aggressive about raising those interest rates. And I wanted to take a moment to look at Lance Roberts' latest blog, There Will Be No Economic Boom. This is a sobering wake-up call for those who believe that recent tax cuts are going to lead to a jump in the economy. Lance notes that last week's passage of the continuing resolution, which ended another very brief government shutdown, has set a new baseline for government spending. We have just added $200 billion in spending to that baseline. I'm actually going to write it all out. That's 200, that's billion, that's million, thousands and dollars. So there you go. Yeah, so that's 11 zeros, 2 with 11 zeros. And when you take that out over 10 years, that's $2 trillion. Yeah, I'm going to do this too. It's a negative. So 2, and then there's the billions and the millions and the thousands and there. That's 2 with 12 zeros behind it. And that's not counting the other spending bills in the works, such as the one proposed for infrastructure and for immigration reform. And with the tax reform bill, we are losing another $2 trillion. Well, you know what? I'm not even going to write the zeros. Over the next decade. And so what do we get? We get a $4 trillion gap in our budget. Now that is creating a big gap in our economy as well. Take a look here. When you look at this, the spending, which is this orange line here, it is projected to soar. While the amount that we bring in, this green line, yeah, not as much, and the deficit is growing bigger. Now, this chart only looks forward by about a year. When you go out even further, you can see that the projected public debt is going to quickly continue to climb while the projected deficits expand to $20 trillion. And that's not just us saying this. Even President Trump's own budget anticipates U.S. debt is going to hit $30 trillion by the year 2028. That is larger than the debts of every other nation in the world combined. And for those that hope that the tax cuts are going to lead to an economic boom, well, that would be nice, but there is no evidence that cutting taxes without cutting spending has ever led to stronger economic growth. These gold bars, well, that is the 5-year average GDP growth rate. So those tax cuts during the Reagan years that a lot of people point to, well, you can see what it did to the GDP. The fact is we need to cut spending, and there is no pain-free way to do it. Right now, we are on a path for subpar growth and increasing debts. That's it for now. Thank you so very much for watching. Please remember to follow us on Facebook and Twitter and YouTube. Check out our past reports on realinvestmentnews.com. You can look at these charts, read more of Lance's analysis at realinvestmentadvice.com. I'm Mike O'Neill, and we'll see you again in a couple of hours.